Some other insights we gathered was, for me, what really resonated was the whole, the metaphor of the box, which is, I thought was a very visual metaphor. It's a book about how an industry shifts from OPEX to CAPEX. So the box is where, if you look at the fragmented world of transport and logistics, the biggest company in Holland in shipping was 3% market share. And the same is for construction. So if you look at the biggest construction company in Holland, is 4%.
Of the market share?
Of the market share. That means that this industry is very OPEX driven, because if it's CAPEX, it will lead to consolidation. And we both have a fascination for architecture, is that the output of the current technologies, especially modular building, is just ugly. Ugly.
Yeah, so modern buildings are not built with the detail like older buildings.
No, it's just modular, it's just shit.
Yeah, I was going to say, you add in the super founder and suddenly...
No, for me, I mean, whatever, even if I always make a joke, whatever Salar was planning to do, I would follow.
Yeah, I was going to ask you, did you go to robots, or did robots come to you?
The rearview mirror, why we like it so much. But if you go to robotics companies, there has been a few generations of robotics companies. I think now it's arbitrary, but I think we're number 3 or 4. This generation, I think the robot company will not manifest itself as robot company. So the client doesn't really care.
Yeah, they want the outcome.
If it's a robot or not, they just want to have this bricks, this wall being delivered at a certain time for a certain consistency, a certain quality, for a certain amount of money. There's 3 things what kind of what supports our thesis a little bit, but is also fueled by the insights of Monumental, is A, the founder is more a product person than a technical person. Second of all, it needs to go into a market where, and you need to organize yourself around shorter, quick iterations, not only within the company, but also testing in the market. And the third thing is, I think, why it's interesting and how the next generation of robot companies, as I said in the beginning, you don't see it's a robot company. So there's, for instance, there is a car wash company in the US, which is actually a robot company. But
it's selling car wash.
It's a car wash company. I think in venture you can play, you can already do quite well if you know what it's not. So if I play tennis or padel, I'm fine with playing a loser's game. I don't need to be Alcaraz to win. I think for venture that also says the same. If you know what it's not, then you already come a long way. And that's maybe I can elaborate on that, but that's something that where Hummingbird doesn't take any concessions. So if they see one like micro signal where they feel okay, it's not, they pass. Second of all, they especially Baat and Virat, they have so much pattern recognition and so much background, and they got only confidence in their own third eye, that they basically, I frame it as the best founder is the opposite of the good. A good founder is MIT, Harvard, linear, great references, McKinsey, BCG, everybody loves him, and actually that's nice, but the best founders are scruffy, non-linear, have non-obvious backgrounds, not always referenceable, great. No, I think there needs to be arbitrage, you know, I think real, return comes from if you move on something where there's no common consensus yet. I think as what Salar said 2.5 years ago when he started a robotics company, everybody had this misconceptions, capital intensive, I've seen this before, do you know these 6 companies? They've forwarded him videos of robot companies that they fit in this building. Look, they also failed. So I think that's there's fellow robots companies in Europe, and we won't say names, but they got some top tier investors in, and they said they didn't ask one right question.
There's also an extreme, like you could be too contrarian or too independently minded, but ultimately to build a company, you actually need to get people on the same page, right? Like you need to tell a story, but what is a company? It's like you have to build a team. You have to at least convince a few people to join and work with you. And then you actually do need to sell. Like someone needs to, at least on the buying side, be convinced of this. I think maybe the mistake of, especially maybe repeat founders, is because as a repeat founder, you kind of get plugged into like the tech scene. You're usually like at that point pretty well connected to VCs. you might start thinking that your peer group or the group, like the consensus you should follow is the one of like the investor class, basically. And I do think that is like the mistake.
The industry, venture capital industry, has the tendency to take themselves very serious, and also that want to show thought leadership, etc. But if you see, and you see this in #humble. I found these guys 7 years ago. #humble in the basement. Yeah, but for that good bet, there was 9 companies. They were shit. Why Amazon's a great company? Not because of their vision, but how they are organized.
Execution. Execution is the point, yeah.
So I think that's, if I were an investor, I would much more look at the capital efficiency of the founder team. How much money and time did they use to get to a certain point? How they have a tinkering approach to the problem. Salar only spent X to get to this point.
This is a low number.
No, but I don't want to throw numbers around, but the number where Salar and Sebastian got to this point, a lot of SaaS companies didn't even get to market. And Salar has 15 robots running around and proof of market and paying clients. So imagine if Salar could do that in that amount of time with that money, what he could do with a double or triple, 4 times that approach. And that's, I think, a lot of investors overlook. When I invested in Revolut, it was not vision or mission. It was Nikolai who shipped 10 times faster than any company in the world, and still is. And he spent 1/10 of the money.